Good morning, everyone. Lots of earnings news and GDP numbers out today, so a lot to report on. But I'm going to call this today's performance versus expectations presentation because if my kid came home and had a bunch of C's on their report card, but they said, next year I'm getting all A's, are they a C student or an A student? I'd say they're a C student, but I'm going to tell you, Wall Street sometimes thinks they're an A student, and you'll understand why I say that. Before we get started, this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So the
Wait, Mike,
first,
Mike,
yep,
I,
go
you,
ahead.
where did
You're
you come up with that analogy? I can't possibly think
I
of what
just
company you're talking about.
Well, we're going to talk about that. And
Does it
this,
start with a T?
yes, exactly. Tesla, we'll be talking about them for sure. So, the first report card, is on the overall United States in GDP, came in at 2.3% for the fourth quarter, a little less than expected. But I'm telling you, if you reeled back and looked at 2024 overall, phenomenal year for overall GDP. So, it's kind of like if my student got A, and B plus, I'm pretty happy with their performance last year. With the number coming in a little bit less than expected, they thought it was going to be 2.5. You know, I guess this could be it gives a better chance for future rate cuts. It certainly implies there's a little less inflation risk with things running hot. So even though it came in less than expected, I don't really consider this bad news. And I can tell you so far, the stock market today is not considering it bad news either. So, but I just put that out there. Also, the Fed had their meeting yesterday. Rate cuts left, or rates left exactly where they were, which the market was expecting that. So that's why no news on that. So now we'll get to the exciting news. So Tesla, one of the most interesting companies to talk about over the last 5 years, came out with their earnings, and their earnings missed, right? 73 cents was came in. It was expected 76, 25.7 billion. They expected 27 billion. Those are misses, and that means they didn't hit the grades they were expected to get. So, so this is, and I don't want to say they're a C student. I mean, this is a good company, and they produce a good product, one of which I drive. So, but this is the thing of what I did versus what I say I'm going to do. So, and I'm going to show you a couple different things of what they say is coming, and we'll see how the stock is reacting. So, one piece of news is they reported $600 million Bitcoin profit because the digital assets rules changed. Now, first of all, 600 million, like, wow. And it has to do with accounting and that. But the bottom line is they had Bitcoin on their balance sheet. Do we know another company that does that in the extreme? Yeah, MicroStrategy. When Bitcoin goes up, guess what? You get to report a $600 million profit, or you get to report a profit. If Bitcoin went down, the opposite effects. So that's one interesting thing I saw from Tesla, that this actually helped their net income. Another thing that came out of Tesla was, and let's see if this shows up here, is a commitment to cheaper cars in the first half in autonomous vehicles in the wild. So I'm going to tell you, cheaper cars means less profitable cars. Now, after having worked at General Motors and seeing cheaper cars, Chevy Cavalier, Geo Metro, cheap cars, and seeing the profit, you don't make as much as you do on that nice big Cadillac or the GMC Suburban or the big cars. So if you roll out a whole bunch of cheaper cars, you make less money. Now, what you do get is you do get brand loyalty. So if you roll out a cheaper Tesla, people like it and say they get that full auto drive, they're more likely to buy the next Tesla on the way up. So there is a strategy. I'm not saying that it's a horrible strategy, but competing on price especially when you consider China's putting out a lot of inexpensive cars. I hate to use the word cheap, but inexpensive cars or cheap. Um, when you start competing on price, you're losing profit. So I'm surprised that they push this so much, but they continue to do so. The other thing on the autonomous vehicles in the wild, I have full self-drive on my vehicle. I like it. I used it the other day for like 50 miles. Drove back from an Air Force base, and it did it, perfectly. No problems. What I don't like about it is it watches what my eyes do. So if my eyes are looking down at the screen to change what I'm listening to, it gives me a warning. Or not that we should ever do this. If I was happening to look at my cell phone, it gives me a warning. I hate that. I hate that the car has a camera monitoring my eyes. So that's and I just do. So supposedly, when these things go out in the wild in June, I will be a beneficiary and I can look wherever I want to look. So this has been promised for years. This is a campaign promise from 2020. This has been, out there. I'll believe it when it happens. I think I bought my car 5 years ago expecting this to happen, and it has not. So here we go. So what's the stock doing after they missed earnings, but they say great things? It's up a tiny bit. A little bit less than 1%, although it's been all over. I'm gonna go down to the 1-day chart, and you can see that initially, look at that, they missed earnings. The stock dropped down below 370. That's what I would expect. But then they came out with news and projections, and the stock shot back up, and that's where it's at. We do get questions like, do we have Tesla in the model? We do not have a direct holding in Tesla in the model, but we do own Texas Capital, TXS, and I think it's their number one holding. It's companies that are headquartered in Texas, so I'm pretty sure Tesla is their number one holding. So therefore, we do get exposure to Tesla, and it has done pretty well, especially as Musk has supported Trump. And that we know how that's gone.
Hey, Mike, one thing on Tesla. So if you're paying this $400 per share for Tesla today, January of 2025, about 93% of that stock price is future expected earnings. You're
Yep.
only getting about 6% of the real earnings in the stock price right now. So this is obviously a story about, as Elon Musk said, right? It has nothing to do with this report card. It's very far in the future, sometimes decades into the future of just using your imagination and dreaming about what can be. So
Yeah.
it's that's just something to be aware of. It doesn't mean, like Mike said, it is a great company. And the inspiring thing there is they have achieved things that were once thought to be impossible. And so then it does make that leap to, well, can they achieve another impossible seeming thing, And then it's like, well, maybe they can. So
That's
a
true.
lot of hope, but that's the stock price as well.
All right, so now we'll hit our next big earnings, which is Microsoft. And here's the exact opposite situation. So here, first I'm gonna scroll down. Here's the earnings, $3.23 versus $3.11 expected. They beat earnings. Revenue 69 versus 68. They beat revenue. So the exact opposite of Tesla. They beat on theirs. However, they forecasted weak quarterly guidance. So this is like your A student coming home and saying, I'm planning on not doing as well next year or next quarter in school or next semester. And are they an A student? Are they a B student? Well, the Wall Street is here's Wall Street's answer, and this is what we really care about, even though it doesn't seem right. Microsoft is trading off almost 5%. We do hold this as one of our core holdings. We do think this is a great company and continues to be. So, but it's all about expectation. So what do I see when I see a company beat earnings and they drop based on this? Sometimes I see buying opportunity. If, for example, you did not have any Microsoft in your portfolio and you wanted to get some, here you go. It's 5% on sale today. Now we'll see what happens from here. I can tell you, and Corey's going to get into Meta. We saw Meta do this last year, where they forecast all these, doom and gloom, stock sold off, buying opportunity, and Corey will show you what they're doing now. One other piece on Microsoft that I think is important for people to know is that they have a piece of OpenAI, which is ChatGPT. So let's not forget that. So sometimes you're like, oh, man, I wish I could buy ChatGPT and OpenAI. You can't, but because it's private right now. But Microsoft they've invested in them. They have a partnership. And, this article I found from like a week ago, but they have a two-way revenue sharing. Basically, Microsoft's funding them some money, but Microsoft's going to get some profit. And it's right now it's listed, it's reported 20%. I mean, it's a significant amount. So if you believe that OpenAI ChatGPT is going to eventually launch and go public, Microsoft will be a beneficiary of that. So I just bring that up. It's hard to know where that's going. I would not make that the only reason that I invest in Microsoft, because it's just a good company. So with that, I'll go to our next earnings, which is Meta and other market expectations with Corey.
Yeah, I wanted to, so kind of talking to that point that Mike illustrated there about Microsoft met current expectations, great report card, but is showing a little bit of hesitancy about, that next report card and what's to come. Bob Elliott from, and I cannot remember the name of his company, but he does run an ETF that is structured like a hedge fund, and he ran a hedge fund for a long time. Really smart guy, a great listen if you have ever got the interest to do something like that. But he was kind of showing this recent backdrop of where we are right now and how we got here, and just kind of taking a little step back to January of 2023, so 2 years ago. The consensus market view out there was essentially a 100% chance of a recession. I don't know, Mike, do you remember any of that?
No, it's all forgotten. Bad news is forgotten. 100%,
well,
huh?
The consensus view was that recession. So you could see real GDP, or expected GDP growth was very low because of that inflationary expected recession. Well, we got the soft landing, and reality blew those expectations away. So in 2024, there was still a little hesitancy, but an increase in expectations a little bit. The market was able to blow those away. We're now getting into an environment where expectations are very high, and you can see that over here in earnings. And Bob Elliott talks about how if companies aren't raising price greater than inflation, then their margins have to expand this year as much as they've ever expanded before. Essentially an impossible amount is what he speculates. So he thinks that these expected earnings that look so good, above 10%, for most of these quarters upcoming, he doesn't think that we'll be able to get there. So when we see what Microsoft said, hey, maybe those expectations we're not going to quite get there, it's just something for us to be aware of in this backdrop. Expectations are high, and we got to be able to hit those. Now, Meta hit their expectations and had a perfect quarter. I wanted to highlight a couple things. The revenue was up 21% year over year, which is just incredible for a company that big, who obviously had such momentum. I think daily or monthly active users was daily active, 3.35 billion daily active people. That's unbelievable. That is unbelievable.
It's amazing because of Facebook. And just remember, if you're like me, you're like, I've never paid Facebook anything. How do they make all that money? And always remember that the theory is, if you aren't paying for the product, then you are the product. Your eyes are part of that 3.35 billion, and you are the product. So
Yep.
they are selling advertisements to other groups to put in front of your eyes. So just my 2 cents. Continue
So
on.
just to wrap that up, full steam ahead for Meta. And I did want to just hit on this. So we were talking earlier this week about the DeepSeek implications of these, international models that may or may not create problems for what the United States had thought of as being, the leader of. The United States was the leader there and probably continues to be, but there are things that are called into question. So what did Zuckerberg say about his investment or continued investment into companies like NVIDIA and continuing to build out that expensive network? He said, I continue to think that investing very heavily in CapEx and infrastructure is going to be a strategic advantage over time. It's possible that we'll learn otherwise at some point, but I just think it's way too early to call that. So this is kind of what we'd like to hear for the US economy, is that these companies are not deterred by this other competition or what it might mean or the potential efficiencies there. They are continuing down this path of heavy investment, and that's kind of the foundation of the stock market we're in right now, is the AI spend, the AI theme, and so that's great to see.
Yeah. And hey, I gotta end with our grade analogy for your Bob Elliott thing when he said there was 100% chance of recession, or he cited that. That's like your student coming home and saying, I failed. I failed the class. I failed the test. I didn't study. It's really bad. And you think, well, you can't do any worse than that. You're going to come in better. And then the next time it was like, I think I'm a C all the way. I've got C's. You got a chance to beat. I think maybe you can get a B or an A. And now the third year is like, I'm A's, man. I'm doing so good. Well, now
Anything
you've
other
got,
than an A is not
yeah,
good enough
and
anymore.
A just means you hit the expectations. So
Right.
now you've only got down to go. So anyways, I just had to close with that because that made me think of it. So
No, that's such a funny analogy. Well, hey, do you have, oh, that's funny.
it's a good thing I don't take classes anymore. So as far as
No, I'm
college, so
wondering, you've had, how many kids do you have, Mike, that you've seen
oh,
through high school?
through high school 3.
Okay, three. So, I mean, could you name any of them? Like, or, could you rename someone, Google or Microsoft or Meta, or, it's just funny to think about that. You could,
Oh my gosh. Well, I will say with
hopefully,
today's
uh-huh.
school, compared to when I was in school and I just said, hey, I got an A and or B or whatever, my parents, okay, that's what you got. You just see that on the report card. My kid's school, like I could actually go see grades, what they did, answers they turned in, like, transparency into the numbers. And that's the same with the companies we're looking at. Years
Right.
ago, it'd be like, here's what we're doing, and you get a little bit of earnings and certainly, audited reports. But, now we have full insight or a lot of depth, more depth than we could possibly use into their numbers. So anyways.
Well, hey, how about this? Who were we? That's a question we got to answer one day. Who were we? Hopefully we weren't Tesla. Were we?
Oh, no, no, no.
I don't know who I was. I got to think about that.
Okay. Maybe
I
that's
think
what we'll
I'd
do
be
is
expectations sometimes.
maybe we'll pull Steve on here too. And we'll do which tech company, which Mag 7 are you?
Are you?
Are you? Are you NVIDIA that we'll call a late bloomer? That's what I'm going to call late bloomer because they've kind of come out of nowhere. Or are you
Yeah.
an Apple that peaked? I don't want to say peaked, but shot up in 2000 whenever the iPhone came
Apple's
out.
got senioritis. Apple's
Yeah,
got senioritis.
seniors. Or are you General Motors where you were the top dog in 1970 and you went bankrupt?
You
No, I
just
just
never innovated. Yeah,
sorry,
that's
GM. I used to work there, so I can say it. Okay. Thanks, everybody. Have a good one. Bye.